Your meeting is being live streamed, and I'm going to get some feedback as soon as it comes on because that's what it always does. And I hit the mute button just in time. GP, what's up, my brother? It's like we haven't done this in forever. I mean, we just did it Wednesday, but
still feels like it.
It's been a long couple weeks, right? Or is it just me because all the shit that I've been dealing with on the home front?
I think the bottoming process takes time, right? So the disinterest has grown quite heavy over the last few weeks. Like I see the amount of posts I'm seeing these days, like, yeah, well, make more money from me, and the market's just not something I'm interested in. Has been happening I've been just seeing more of the posts. So it feels like like one of those spaghetti westerns where the thing just kind of rolls by. What's it called again? I can't remember.
Tumbleweed.
The tumbleweed, yeah, that's what it is. And it just kind of rolls by. That's what like a lot of the FinTwit platforms have looked like over the last couple of weeks. And I'm like, this is when the real work begins, right? Because now you got to start, if this is a medium to long-term bottom that we're experiencing in the markets, and not just some head fake. Now you got to start separating the good from the bad, right? Because
the wheat
we do have a fair bit of regiment change amongst the Fed. But this is what I wanted to see out of this market, which was a pivot and a push higher without a Fed, right? Like essentially the market saying, hey, Fed, thanks for supporting us for the last 14 years. And we had like an initial scare off the Fed, kind of like off the candy store from the Fed. And now we get to iron out what the next stages of the market look like. And we're not beholden to your Fed policies and stuff moving forward. So I'd like to see this become more of a long-term kind of bottom here where the cream starts to separate it from the rest of the crap, right? That we've been pushing for, the African Amazon, the new Netflix, which is the same as the old Netflix, like Fubo, right? Or Jumia, or all these companies that could be viable years from now, but weren't viable when they were running up. So now we get to see, hopefully we start to get to see the separation of the good from the bad. That's my hope and want from the markets, that we move away from the Fed being our daddies. Right? So,
well, Jay Powell will always be my daddy.
Yeah. But that's if you're looking at, like, for me, looking at macro levels, we were just talking about this before we went live, Bags, was people out there are spending, man. Like, anecdotal, I know you have one, but I was 2 weeks ago going to drop off something at the UPS store, and this lady was sending bagels to her new son-in-law for his birthday in California, and the bagels were probably like $12, but then she ended up spending $200 to ship it. I was like, what?
Maybe some damn good bagels.
I don't care what bagels they are, man, unless they're cleaning my house on a daily basis. I don't.
Yeah, that's. But
wild. People are spending was my whole kind of point, right? Like, and then I saw her walk out to her car, and it's not like she was driving some $100,000 Lincoln Navigator. She rolled into her like 1996 Toyota Camry. So, people are still out there spending on the things that they want to. Maybe they're cutting back on the things they don't need, but
and my wife and I just got back from a little shopping trip. As we get ready to move, we need to pick up a few things. So we went to Home Depot and Lowe's, and our local factory outlets are nearby. And man, that place was crazy. Like, lines as far as you could see out of every store. I mean, even Restoration Hardware, right, which we went in, high-end, home goods, right? Just a lot of people in there. And it's hard for me to say with, I keep saying this, with, low unemployment, that the consumer's still not feeling good, man. Like, we're we're paying $4 plus per gallon for gasoline, but stuff in restoration hardware RH is not cheap. So
No.
people were in there buying. People were knocking down the doors at Nike, Home Depot and Lowe's. Just, I mean, people buying. Part of that, I think, we had some snow a couple of weeks ago, but at the same time, that people weren't just in there buying like a couple flowers. Like they had tools, they had wood, lumber, for projects. I mean, it was. I was really surprised to see how many people were doing stuff. I mean, we went in to get boxes. We probably had the lowest ticket item of everybody left, but yeah.
It's just not like, it's good to see, right? Like, so the optimistic side of me says the consumer still is, highest savings in a really long time. People are gainfully employed, making good money, higher minimum wages across the board, so they're spending a bit more. That maybe, just maybe, we aren't beholden to we've been selling off on the same damn news for 6 months now, right? Like the Fed, or China, or Russia. It's like,
whatever.
yeah. So
Inflation.
yeah, and we continue to sell off on this news. So, the hopeful side of me says maybe the market can return to what it used to be before all this free money stuff came in, which is a slower grind up. We didn't get 100% moves in, like, you got them in maybe a handful of stocks, but you don't get them in every stock. So maybe we can return to a more grind it higher kind of build over time market, and not up 600% in 6 months.
Yeah.
Right.
Yeah.
Because of a huge TAM or something like that. So that's what I would like to see over the next 6 to 18 months, is that we decouple ourselves from an easy money monetary policy, and we start moving towards. So that doesn't mean like all the same assets that were doing better in free money are going to continue doing better in a hard money environment. So you got to be diligent about what you choose, but overall markets is what I'm trying to kind of picture out here, as like, we got a 32% correction in technology, right? So and if you're looking at tech names, even like the big names, Amazon was down what, 46-47%. These guys,
I think at the lows, right, from high to low.
Yeah, and they have doubled their revenue over the last couple of years. So you basically discounted last 4 years of growth, 5 years of growth in Amazon, and they're still growing pretty well. Like maybe not their retail segment, but their AWS is still like ticking along at 30%, which is their biggest behemoth, right? So
right, and that's the bull case that we've kept saying for the past few months, right? Is that even if retail slows down, AWS has become the leading profit generator for Amazon, and that's a high markup business. It's not like people are going to stop all of a sudden using the internet. I mean, it's more so the internet is each minute that goes by is becoming more ubiquitous for society, right? So it's not like there's a whole lot of stuff powered with AWS.
Yeah, and like I think the valuations, we tend to overshoot to the upside or the downside in unreasonable fashions, right? Like so we're at that point where what happens from here is pretty important, but it, like when we tagged the Biden lows and we haven't seen that low again, this is his Biden election, post-election lows, right? It's like, okay, well, we have some kind of support here. This is pretty big for, we talked about the Fed put, but I'm talking about the Democratic put, right? Like if they want to be in power in the next cycle, they can't let the markets crash here. Let's be honest. Maybe they do. Maybe the Republicans have that much power, and they, like, I don't want to talk about politics and stuff too much because that's not my jam, but it was nice to see them save it there. And then you have bunch of other technical stuff, and things are just destroyed, right? So people are going to come in to bottom fish a bit.
Well, as a poli-sci minor, it is my jam. No, I'm just joking. We're not going to get into politics. But to some degree, it all intermingles, right? And I don't think that I think it wouldn't be a genuine conversation if we didn't talk about things like that, right? And I know we shared things as we led up to the 2020 and after an election, right? Of just what typically happens during a presidential election cycle and who wins, kind of leads you to one thing or another historically, right? So politics is part of what goes on with the markets. But no, I agree with you. If Dems want to hold on, they've got to show that they're actually doing things that benefit everyone, right? Whether it's the market or these other issues that we have going on in our country, they have to show that they care and they're able to get things done.
That's their platform they ran about, right? Equality amongst people. And if you start getting that back and the markets are also in a better position, then you start to see better stuff. So I like the fact that we probably have a bottom here. Obviously, if we break that 280 level, I don't think we hold, like, to be honest. And I think it becomes a pretty disgusting nightmare.
Which level, on SPY or the Qs?
On the Qs, the 280, that's a binary low.
Yeah.
The lows that we've been kind of holding, I think it's the same low that we held. We didn't even get to that level on the SPY because energy is redonkulously strong. And I think there's secular shifts here for sure in terms of what you're investing in. I've been talking about the energy short for quite a few months now, and it continues to grind higher on waning momentum. And my conversation is not a long-term short, it's a tactical short, right?
Yeah.
And so that's why I talk about it, because I do think there's a bigger trend picture here in energy. Do I think they once again lead the market caps amongst all? No. But it's a secular shift. We're moving into a real assets kind of economy, right? So we got to be careful of some of those secular shifts, and we got to identify them.
Yeah, and I freely admit and will continue to admit that I got the energy trade completely wrong. I own that, but at the same time, unlike all the high growth plays coming out of the 2020 lows, energy was trash, right? Like, they were at the very lowest multiples historically, many of them, that they had ever been. So talk about a classic buy low, sell high moment. I shared earlier today some insider buying and selling for the energy sector. And our good friend Ethan was like, insider buying and selling is like the single worst, indicator out there. And to a large part, I do agree with that, especially in individual names. But at the same time, where was all the buying happening in the energy sector? The spring, summer, and fall of 2020.
Oh, yeah, for sure. The volume,
and that's where all the insider buying was. And they've been able to ride this out because there had money rotated, right? And what was undervalued has now become overvalued, in my opinion. I mean, we can argue about multiples another time. But now we're at the highest insider selling since 2011. And I don't think that that's by accident. I know a lot of these insiders, you don't just, I look at Satya Nadella, right? He picked the top in Microsoft in November, and he's had a classic way of doing that. But I think
this time around, last time he missed the double on his own stock. So I think that one's That one's hard for me.
Well,
Because,
I'm more of using Satya as he knows what's happening more inside his company, as do other insiders than the rest of us, which is the classic argument for why insider buying and sellers, do something, right? But as we've noted out in the XLE, we've seen lower volume. We've seen lower volume coming in the individual names. So it makes sense that a lot of these insiders are cashing out on, 200% gains, right? Like, I mean,
and record profits.
right? I mean, I went through a little chart storm earlier today, and just look at Marathon Petroleum, a very good company, right? Like, I'm not knocking Marathon Petroleum at all, but even if you missed the bottom, and let's just say you got it somewhere around 30, like, you've got a triple on that, right? You're up 250% basically. If you bought anywhere in the 30s for the most part.
And look at
So,
Fang. Fang's a 10x.
The
oil stock.
Yeah, no, but I use Marathon Petroleum as just like a run of the mill energy company, right? Like, there's nothing, there's not a superlative about Marathon, right? Like, you look at a Valero, right?
Or Chesapeake went through bankruptcy and now has tripled
250%.
Yeah.
The indicators are hot, and I just think they can keep running. Overbought can stay overbought, oversold can stay oversold. Like, I get it, but I think the clock's ticking, and it feels more like summer 2021 for the tech stocks, for summer 2022 for the energy sector now, in my opinion. And I could be wrong. Like, it still looks bullish, but so did tech for a while too, right?
Yeah, I'm bullish energy long term, because we need it all, right?
Yeah, for sure.
I think
I'm just saying, from a technical aspect, the shit's oversold or overbought in a bad way.
Yeah. And that's the thing, right? Like, like, to me, when we started this segment, we were talking about people buying, right? So people are out there buying, and all their costs are going up on everything else. And oil prices are sky high, gas prices are sky high. I think what happens personally is people cut back on the traveling versus furnishing their homes, right? Like, I think people are going to be making that choice over the other choices,
Yep.
right? And then they'll wait for the energy. They've already gone 2 years without traveling a lot. What's another 6 months, right? Like,
right.
Like, let me furnish where the supply chains are easing up a little bit on the furniture side and the goods side. So let me allocate my money there for now until energy prices come down a bit, because everyone knows they will come down. The question is when.
I mean, like Chesapeake.
Yeah, dude, they went through bankruptcy and they're
I know, it's $100 stock now.
Yeah. Right. So,
like, I'm not making, and I made this call Wednesday. I said, I'm calling it. This is my call. I'm going to stand by it. Healthcare and energy are going to take a back seat. We're going to rotate out of those, and I stand by that. This is not me. This is not like a vendetta trade, right? Like, I'm mad that I missed energy. Like, I'm fine with it. I miss trades all the time. Big whoop.
Yep.
I just feel like those were the two sectors that had unbelievable strength. And talk about healthcare for a second. Like, look at, I mean, what AbbVie did is, I mean, that's almost pick your energy, chart, right? Like, I mean, that's straight up, especially from last summer, just straight up. So I just, I feel like that it's not in a good spot. I looked at Bristol.
Warning shots were fired, right? Like,
here's
your first warning shot. If you're going to be stubborn, you're going to think it's going to go up, because the first one is like, what was that? It dropped like $20 in one day or something like that.
Yeah.
That's your first warning shot, saying, hey, we're coming towards the end of it. And then it's going to grind up. Try to reclaim that high. Maybe it does a little bit for a few days, a week, whatever it is. and then it's going to fail again because it doesn't have the same momentum, right?
So I charted
So
Bristol
you essentially have that
Myers.
capitulation kind of breakout top, and you see it in XLE, it's grinding up. You see it in ABD, a lot of the dividend players, right?
Yep.
Look at Kraft Heinz. For a moment, it was doing really well, and in 2 weeks, it's taken a massive dump for what Kraft Heinz is, right?
Yeah. Packaged food company.
Yeah.
Condiments.
Right. So like here's your first warning shot that maybe this is not a value play. It's a dividend play, but if rates start going up and people are starting to get more money at the bank, and this is paying 3% versus the bank paying you 2%, where are you going to put your money?
Yeah, and I'm going to bring it back to Bristol Myers. I charted this so long ago, and this is basically the range that it's been in since 2013. All right, It's been in this range from low 40s to $75 basically, and now it wants, it's acting like it wants to break out and into this next range box, right? That's what this green area is here. But then, like, look at the failure. Like, I'm going to get in, nope. 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 Right.
Yep.
And it's like that what once was strength, and you can still argue has some strength, is weakening basically. And I see that all over the place in these names. Now, granted, most energies made new highs, but if we look at it like
it's incremental,
right? If we look at it like this was the high in Bristol Myers on lower volume. Across the board in those energy plays, we're seeing, and you know me, I'm not a big volume guy. First to admit, not a big volume guy, but we're making new highs on lower volume. And I'm expecting a similar thing to play out. And when I looked at those names who, quite frankly, had shit the bed,
like
right?
Apple. Take Apple for example.
Yeah, well, yeah, and Apple has been weak, but
bellwether, but
I wouldn't call it has shit the bed, but its volumes, is what it is. If not, it's, if anything, it's picking up a little bit, right? So,
but incrementally, it was making new highs on lower kind of volume, right?
Sure, yeah.
So when it finally folded, and you'll see Costco, Target, Walmart, they're coming after all of this stuff. But what you want to see is what they're coming into, right? And that's where, if you're looking right now, it's a lot of the new IPOs. That this is you know how I feel about IPOs. Don't touch them for the first 2 years, because they'll grind you out. It's just miserable experience, right? They're like, oh my god, it's gonna go on forever. It's gonna be the best stock ever, and then you get like 6 months of winter in hell, and you're like, Jesus, right?
Yeah, Randy's with us on YouTube, and he said, look at UNH so indexed. Absolutely. UNH is indexed to the hilt, right? And there are a few like UNH that still look pretty good. And I'm not saying that everything energy and everything healthcare is a no touch. I'm talking in broad strokes here, right? For the most part, like, I don't think I want to buy Marathon Petroleum at 100. Yep. I don't think I want to be buying Bristol Myers at 77.
Wait for the pullback, right? That's the goal here.
Right.
Look at Look at Humana, HUM on a weekly. You're on a weekly, right?
Yep.
Like, dude, there's your first warning shot. Look at that massive sell on pretty solid volume, and it's trying to recover, but keeps getting rejected at that kind of. Yep. Oh, so I think it breaks out here, but then eventually ends up failing, right? Like similar to the IWM.
And what do failed moves do?
False moves lead to fast moves.
That's right. And we've seen that across the board in these high growth names, or not just high growth names, everything except healthcare and energy. We've seen this in.
Yeah.
And I like the meme that I've seen of the Grim Reaper, going from door to door, right? Like first it was Bitcoin, and then it was high growth, and then it was Apple. Well, you better watch out, to the healthcare. You better watch out, the energy sector.
Yeah,
Poor risk
but now
reward. That's absolutely right, Randy. Poor risk reward. When you're buying at the top, you got poor risk reward.
agreed. That's, I think we were talking about that with XLE, right? When it was like 81, 82, it's like, well, you have potentially a move to 91, but you get like another 10% or so.
Yep.
But to me, you're one day away from crater mode, right? And then not never recovering, but taking a long time recover, 5-6 month grind, kind of sideways or down or whatever it is. So the risk reward there is,
and sideways is a direction too.
Yeah.
I don't want people to hear me saying like, I'm expecting energy and healthcare to fall off 30 and 40%. I'm more in the lines of thinking that those days in the short term and hopefully longer term are probably coming to a close. Your areas of, getting some real alpha is probably not in the names who have been leading for the last year, the energies and the healthcares, but you're probably, what I'm doing. And if this were financial advice, which it's not, I would want to be doing what these insiders in the energy sector were doing all summer and fall of 2020, was buying their stock. So I almost would bet that, some of these tech CEOs, some of these growth CEOs are buying their shares.
They are. Look at Spot. I think the CEO bought 5 million in Spot.
I didn't see
and look at what it's done since.
Yeah, I charted Spot earlier today, and I think my exact quotes were, "This is what a bottom looks like."
Yeah.
Right.
And if you pull up not just Spot, but pull up
we've
a lot of the new IPOs.
We've got this area right here that has held. I mean, you had a wick low, and wick low is off that, but this was basically the bottom area, and now we're sort of at it. So I absolutely think that's what a bottom looks like. And
then pull up Doc N, DigitalOcean.
I know you love some DigitalOcean. You mentioned it the other day.
Right. This is like, you don't have the volume, but if you're looking at this on a weekly, this is another one that's one of those IPOs that broke out, came back and broke the IPL low to test where the bulls are going to show up. And dude, they showed up, right? Like they showed up they've already been accumulating. They got a chance to reaccumulate. So they're adding to their position. And is it going to be a straight line up? I don't know about that. All I know is these are the plays that I'm looking at right now in terms of the next cycle that you'll see these IPOs start to rise. So DocN is one of them. D-Low is another one that Zach talks about. Apps is another one.
Can't type today.
D-Low. Right? D-Low came back, broke the bottom, the IPO bottom, and started to see some serious buying kicking in.
Mm-hmm.
Right. So like in terms of when I think about cycles, is like the first cycle of most IPOs is VCs cashing out. Right. They've been in for 5 years, 2 years, or however long they've been in. And so when they get their first kind of move up and out of this hot new IPO, they're cashing out their stocks. And so what you see after that, as they're cashing out, which is propelling the price forward, which I know doesn't make any sense because they're selling, but there's not a lot of volume. And as they're done cashing out, the stock starts to fall and comes back and essentially retest IPOs in general. Right.
Randy's saying lots of insider buys in the mid and the small caps. And, I'm not surprised. I don't normally keep up with a lot of insider buying and selling. But what really got my attention was, that chart that was shared at Charts for Charity of those insider sales in energy. And these CEOs, even in the energy sector, much like the market makers and the institutions, they're not just selling things and leaving money on the sideline, right? Like it's going somewhere. So even if I'm a director at Chevron and I'm cashing out some of my stock in Chevron, that money's not just going to sit there. Like it's going somewhere or has already gone somewhere.
Yeah, he's buying his new yacht, but let's be yeah, it's really interesting to see some of the dynamics that like I think I shared this chart last year. Right around this time, 2021, it was like the comparisons to Gates stepping down in March of 2000 are similar to in this bull cycle, you could argue that Jeff Bezos was the greatest investor
Right.
known to man, right? Elon's come up recently, but for the past 20 years, he has allocated his investments in his business in probably one of the best manners on a large cap company, right? That started as an online bookstore and they've evolved it to this crazy, and in the height of a bull market says, yeah, I'm going to step down, right? And Bill Gates did the same thing in
It's getting a little too hot,
right? Yeah, that should have been your first kind of like light bulb moment to say, holy crap, the markets are changing, because one of the greatest allocators or investors of our time, right? Of our time, I'm not talking about of all time, because Buffett's probably all time, right? Or Rockefeller or whatever, but Buffett's everyone's kind of investor. He's invested in himself and his company the best that we've seen, hands down, right? He's built a network that will serve people for years to come, unless some scandal happens or whatever, right? And these things happen, but he's stepping down from that and he's letting his CEO of AWS take over. So that tells you that, yeah, and it wasn't like he was like 80 something. I think Bezos is what, 57?
Yeah,
58. So it's not like he's old. He's probably aged a lot running a massive business, but it told you that maybe things are going to chill out a little bit, right?
Yeah, and as we're talking about some of the greatest investors of all time, Paul Pelosi, the husband of Speaker Nancy Pelosi, was arrested on DUI charges in California. So that
must be that Roblox position.
That's an interesting development that just came across the news wire while we're here doing the pod. But yeah, I'm still scratching my head on Buffett though, dumping the airlines. And he dumped the airlines near the lows. So, I mean, even if he sold, like Southwest was a major position, like he's still out 50%, Delta was another one of his big positions. Where is Delta Airline? There, the AL. Same thing, like around 65%, like that, and that's of Friday's close. That's not even the highs back in 2021. So yeah, I mean Buffett does. We all know Buffett's incredible and does a great job. He's always done a great job. But there's also those scratch your head moments, right? Berkshire bought Snow, which does the opposite of what normally you would expect a Berkshire Hathaway investment do. So yeah, it's really interesting to see that we're all fallible. None of us are 100%. We all make mistakes, and it's just one thing I do want to talk about mistakes where we were all dead wrong on our NVIDIA call post earnings. I was lucky to pick up some, which I was really happy to do. But yeah, Nick said 200 to 210 by the end of the week. He was actually the closest, but still way off. And then GP, you said flat, and I was kind of with you, but plus or minus 2%. So NVIDIA had a 10.8% week. So
on volume.
We'll just give that one Nick. We won't look at the volume. We won't beat him up too bad for still being and 25% off, but that's okay.
Yeah. Can we also talk about Tesla?
Yeah, of course.
So,
what wasn't Nick saying he didn't like Tesla? And I was like, I think I would like to buy Tesla here, really.
So I bought right under 650.
Nice.
And a lot of the comments were like, "Are you sure? Like, why are you buying?" I'm like, I think what I know a lot of people don't like Elon, and I can understand that he's not likable at many moments. And even in my investing journey, it's been like, dude, shut up. Right? Like just
make me money, Elon.
Yeah. And he has, right? Ultimately. But he plays the markets well, right? So what I think you saw, I think Pratt shared it, which was, they're delivering Model X's right now, the Plaid, right? Because it's probably their highest margin cars, essentially. And most people who are getting the Model X Plaid are probably forking up to 12 grand for the FSD, which is all margins, right? Because they're not delivering anything via FSD. So you have this guy who's smart enough to know that if he misses his numbers, his stock's gonna get rocked, right? Like, because it's Tesla, it moves insane amounts on a day-to-day basis. So he's doing what he's got to do, which is delivering the high margin cars. And what one thing you can argue is how much of a tool he can be at many times in his career and his journey, but what he has delivered is a product that people want, right? So if you have, and he's done it well over time, right? He's forced industry leaders to shift perspectives from gas cars to electric cars. And when you get Tesla at bases and you don't get a breakdown, those are usually good moments to buy in the stock, in my personal opinion, right? And we had a good week, but it's not out of the woods here. It didn't clear last week's highs or the prior week's highs, right? So it could still fail here. I'm not saying that it's out of the woods, but you have a company that's still growing like nearly 100% a year and the demand is insane for the car. They just can't produce enough. So
yeah, and as much as these other auto manufacturers want to do, like there's a lot to knock off the incumbent in basically first mover category, right? Like it's hard to, it's going to be hard to knock off Tesla right now. I'm not saying it's going to be impossible, but when you don't even have, when you have very limited amount of EVs on the road, people are going to think of Tesla first, and that's just going to be what it is for a while.
And that's, so like, I'm still waiting for the iPhone killer. Do you remember that conversation from early, like 2009, 2010? Every phone was the iPhone killer.
Yeah.
And basically what happened is no one killed the iPhone. They just adapted to be a part of the market share, right? The market grew bigger. So they got, the people who ate Apple went to Android, and a lot of the other ones just kind of fell off the face of the planet, like BlackBerry, for example. But killers don't always arrive, right? The market share can continue to grow. And if you're kind of thinking about the future 20 years from now, do you think that EV market share will grow? So that's a question to ask, right? If
of course it's going to grow.
Then don't you want to be part of the leader when you get opportunities?
Yeah. Funny, we were talking about insiders. Wall Street Jesus just posted, guess who's buying stocks? Insiders. Yeah. with a market watch link. We note that buying has largely been driven by insiders of small cap companies. Russell 2000 sentiment is strongly positive, but S&P sentiment is neutral. And I shared again, coming back to my chart storm earlier, I shared a ton of different charts this morning, and the IWM was one of them. Looks great. We're back to the pivot basically, right?
Yep.
And I don't think it's going to be long before we see similar moves in the S&P, which we're basically back to the pivot in the S&P. Similar moves in the Qs, right? So I think it's just a matter of time.
And XLF banks have already taken back the pivot.
Yeah. And a lot of banks look great. I posted a lot of bank charts today. A lot of banks look great.
Yeah.
Goldman Sachs, nice reversal after being on the verge of collapse. It looked like collapse on stock charts, not as a company. But yeah, the banks as a whole look really good. I'm going to show.
And then you see rates coming down. The 10-year rates are coming down.
Yeah, I mean, maybe my mortgage is going to come down too. Who knows? They're going to be like, no, you're locked in at 4.75 or whatever it was I got, which was really nice. But
that's really nice.
Yeah. Randy's still with us. Randy, you got any questions? You want us to look at anything in particular or specifically? GB, you want to look at anything specific?
So back in January, we started talking about Netflix, right? Being potentially the catalyst for all of tech to come down, right?
Yeah.
And I was hoping it wouldn't, and unfortunately it did. I think what I'm looking at and what I'm seeing in Netflix, you have the chart up there?
There's Netflix.
Yeah. Add some volume back in.
Okay.
So, and go to the daily, right?
Okay.
Thank you. You'll like, it looks a little muted, right? The volume looks like it's really tapering down, but that's a lot because of that earnings bar, because that earnings bar was ridiculous volume. It was like 130 million. But if you're looking at the last couple of weeks here in Netflix, it's 8 to 10 million shares a day when it used to trade like 2 to 4 or 3 to 5, somewhere around that, right? So you're seeing some kind of heavy kind of accumulation, and you'll see on both gap downs, you'll see how each gap down is on relative strength, right? Mm-hmm. So I think, and you can't discount, this is my bull market leader. I know you and me don't agree necessarily on Netflix, but I like what I'm seeing here. It's very similar to the 2011 pattern starting to play out, and I can potentially see this going back to that gap fill going into earnings next earnings in July, right?
I mean, I think it looks good, GP. I know I've shit on Netflix for months now, it seems.
So if this one starts to act better, I think the whole market starts to act better.
But if you liked it in the 500s or 400s, I mean, you got to love it sub 200.
I have added under 200 because I think it continues to, they continue to evolve, right?
You got this what I said before too, which, you know, I love my chart patterns, but you got that going on too.
Yeah.
I mean, I wouldn't be surprised if in the next week to two we're trying to push that gap.
And the gap I'm talking about is like the second gap, right? Like,
yeah, up here.
Yeah.
Yeah, no, I got you. What I'm saying is, just looking at the chart right now, I wouldn't be surprised to see it push that 250 area in the short to intermediate future.
Yep.
At all. So I would not be surprised at that at all.
This is what I like to see, and I've posted the chart already, so you can go back and check my charts on StockTwits if you're looking for it. But the comparison to 2011 is fairly similar. Like, it's playing out very, very double gap down, 75% move down. Like, it's almost to the T. And even in 2011, you know what caused that gap down? It was subscriber count. So
Randy wanted us to pull up TPG and APO. I don't know anything about either one of these companies, but to me it looks like TPG's broken its downtrend.
It's a new IPO, huh?
I would say roughly that was probably the pivot that I would be looking to have taken out. It looks pretty good. I don't know anything about its finance. Investment managers, I have no idea what TPG is or what they do. But from a chart perspective, I can fucks with it right there.
I need more time. This is a new IPO. I'm not gonna even I hope it does well for you, Randy, but I need a minimum of 12 to 18 months to being long-term.
Apollo, gosh, I remember getting asked to chart Apollo somewhere up here in the 70s. Let's see if I still got that chart. Maybe I do, maybe I don't.
Hey man, that's about to reclaim the 200 day. That's pretty strong.
Oh yeah, here it is.
It's reclaimed the downtrend. Apollo looks good.
Here's my Apollo chart.
But this stock doesn't look like it moves like what it just moved in the last 3 days though.
No.
Jesus.
I don't know if this reminds me. I think I was showing this to Ethan. This is 2 mentions of Ethan during the pod. Was that on a weekly? Yeah, it's a doji. Yeah, doji. Yeah, that reminded me of that, which didn't mean that we were going to get this full move. But yeah, no, it looks pretty good, I think. You said it's reclaiming the 200 day. No, it's still a little bit away from the 200 day. Or is it, you got the 200 EMA up? I don't know.
Yeah, it's a declining 200 EMA, so I would imagine it gets rejected, but it's been rejected at that a handful of times. So usually the second attempt is always the most powerful, but this market's been selling the second, third, fourth attempts. So
yeah, it smacked right off the 120. But yeah, I mean, it's definitely. I think it has also broken its downtrend. Yeah, we can argue about it, but yeah, I would say if it hasn't, it's very close.
I think the other one that you have to pay attention to is Zoom.
Oh, I posted this one earlier too. It just looks like a delicious, beautiful bottom on Zoom.
And a profitable company, right? Like I understand they've been selling it nonstop since November 6, 2020.
Mm-hmm.
But you got to a point where it doesn't even make sense anymore. It generates $2 billion in free cash flow. Its market cap was
it just looks like a very nicely formed bottom.
Yeah, technically great, but even fundamentally, right? They stopped growing, but they're generating. Their market cap was $27 billion going into, or $26 billion going into earnings, with $5.5 or $6 billion on their balance sheet, no debt, and so you're basically every 10 years the company is going to generate enough free cash flow to cover their market cap, right? Like that's without any more growth, without any more expansion, without any more, like, that's nuts to me.
I have a friend whose spouse works for Zoom, and we were talking the week that it bottomed right here. And he was not in a great mood because he has company stock. And I was like, it's gonna be fine. Like I think this might be it, you know. And then I talked to him mid last week, and I was like, see, I told you, just hang in there. It's fine.
Yeah.
Your stock's fine. Don't worry about it. And sure enough, right? Like, you know, it bounced right out of there. The daily looks awesome.
Daily looks awesome. You have the fears of teams taking away market share of Zoom have abated because it didn't ultimately. You also have a nearly year and a half downtrend that is trying to break out of. So it's going to get a little messy while it's doing that. Yep. But dude, solid company, fundamentals are great. If you want profitable, this is as profitable as you'll get for as young a company as it is. You know what I mean?
I
Like a
completely
lot of
agree.
these IPOs, tech IPOs, look at Uber, man. It's been unprofitable for as
Gee,
long as it's been public and way before that. And it
I
looks like
was looking
garbage.
at Uber and Lyft earlier this morning too, and they might be trying to form a base, but there's just too many better opportunities to take a shot at, in my opinion. Now, don't get me wrong, like I could bounce out of here, and Uber could be up 50% in a few weeks. That wouldn't be unheard of. Same for Lyft, but there's I'm not going to part money with them right now.
It's left to right and not right to left, right?
Yeah, exactly.
So it's hard to get involved here
It's hard to be
personally.
excited about it. It's just hard to be excited about
And so, like, it really depends on how you invest, right? If you're investing in companies that you want to hold for a long time versus technically you're getting in and out at every possible big pivot point is a different conversation. So if you're investing for a long time, what do you see in Lyft that gets you, or Uber that gets you super happy for a 20-year hold, right? The problem with a lot of these guys that IPO'd is the VCs cashed out. They weren't looking to grow the company. They weren't going public so they can add money to their balance sheets so they can continue their high growth. They were looking to cash out.
it.
Uber, what, IPO'd at $100 billion or something like
Yeah.
that? What are you
Well,
trying to grow to?
and to that point, I think you have at this point have a pretty good idea of what my style is doing thing. I would rather just park my money in an ETF than say, okay, I'm risking major upside from Uber or Lyft, right? Like I'm good in the S&P, I'm good in the top 50 of the S&P, I'm good in the Qs, right? Like why do I feel like I need to put money in those places? But again, like I've been wrong. I could be wrong. This could double in a year, and it wouldn't surprise me at all. But at the same time, I like the stability as opposed to the volatility when I'm having long investments and not trades.
Yeah, double from 17 is not unheard of, but
No,
where, like, anyway, it's just not money where I wouldn't park it here either. I would rather park it in a dividend fund, right?
yeah.
Like one of the ones that sell weekly call. At least you generate 8 or 9%.
Well, I mean, if I want to be involved with volatility, right? Like I'm going here, right? Like you know, did Kathy hit a bottom? Did Art
I
hit a
don't know.
bottom? I
She's
mean,
too faded.
maybe,
She's too
but
faded.
again, like I still have some money in Art, but at the same time, like I'm not adding to it. Like again, I feel like that's more speculative than just let the train keep on chugging and growing my money.
I know, but isn't Zoom the second or third largest position in ARC?
I think Zoom is one of the yeah.
And
Hang
Tesla is
on,
the
I'll
largest?
pull it up. I'll pull it up. Kathy's
And Tesla is the
art.com. Shout
largest?
out to Kathy's for
And
always
Roku,
giving
right?
us this. Actually, Zoom's number one now.
Number
Yep.
one.
Number one in ARKK.
Yeah.
And combined, it's still Tesla. Zoom is number two. Roku is number three. Square is number four. Exact Sciences is five. Teladoc six.
Okay.
If Teladoc gets any type of bounce, Teladoc's going to be in the top three in a heartbeat
Yeah.
because they have 11.6% of ownership in Teladoc right now.
Yeah. And they have a big position on Roblox and
Path, Coinbase, Twilio, CRISPR. That's the top 10. Shopify, Intelia, DraftKings, Unity, Beam,
Coin looks good
Signify,
though.
Robinhood, Fate, Ginkgo, and PagerDuty are the top 20 in combined. Roblox comes in at 23, Spot 22, and Twist, which I actually was asked to chart the other day, is number 21.
Yo, can we do a shout out to Duzio?
Yeah, well, of course, you know I love dues. We can always shout dues out.
Let's shout out Duzio and challenge him to come on one of our podcasts to talk to us, man. I don't know if he will, but
Dues, you've been challenged by GP, but you know he's an algorithm. You know he doesn't
he doesn't
speak.
exist.
He doesn't exist.
Well,
But
hopefully he can not exist on one of our podcasts.
but his twatter fingers are up there with the best of them. His twatter fingers. Which was one was saying? Coinbase. Coin. You were talking about coin.
Looks good. Coinbase looks actually pretty
Yeah,
damn
I think that's probably a bottom.
I don't know if I can say that.
I think hitting $40 a share. I'm not saying that it can't come back and retest or come back into the 40s. I'm not saying that at all. But I think the bottom is in. I don't see this going below 40.83 again.
Yeah, no, I don't think you'll go back to 40, but I do think when it hits the 50-day or the 20-day, whichever one happens, you'll get some pullback. But
yeah,
you're building the base, which is what we want to see here. We don't want it to go sky high from here. You want it to build the base
for sure.
So you do have strength, right? Like when things start to move, why a lot of these things have died is because they never built bases. Like DocuSign, if you pull up DocuSign, there was no base.
Nope.
No base whatsoever.
And real quick on coin, I've been long coin before. And I will be interested again. But I would be shooting against 60 right now. If that 60 breaks, all bets are off, but I would want to see it above. I would want to see it maintain 60.
So the way I'd like to see this play out, hold up for a second.
Okay.
On coin is I'd like it to test that 50-day at like 110, 117, whatever that level is, and then come back and test this gap, right? That gap that it's been basing in here.
Yeah.
That's kind of like the way I'd like to see it play out. Obviously, the market does what it wants, but I can see it pushing to like the 115, 117 level where there's a decent amount of resistance coming back and retesting this gap. And if that gap holds at 70, what is it, 73? Then you probably have
$70.14, $70.14.
So right around like this area, not rocket. I don't mean it's not exact science. It's a range.
Yeah,
if it comes back and holds this area, I think you have a really solid tradable. Because I wouldn't want them to go. Market's been weird, and they may, but I wouldn't really want them to go back to that.
Yeah, that little blue area there. There's where we want to play, right? You're risking 60. If it breaks 60, then you have more downside. If it holds 70, you probably got more upside. So it can play around like it has been for the past few days in this area. For sure.
Breakout, the initial breakout, because everyone gets excited, then they get disappointed because it retests this level, and then Shazam, right? Like people start taking their profits on, they bought at 60. I'm going to lose all my profits again. So they sell. Yeah. But like if you go to the DocuSign weekly, right? I talked about this months ago, is there's no base. Like expand out more. This was the base. And what did it do? It went up, came back and tested the base, and now looks fantastic to me.
Well, I like the way the chart's looking, but when you're running into the 9 weekly, I just want to see you get over it. Right now, it basically closed at it, so I would wait. This is one of those that you either buy it lower or you buy it higher. I don't buy it right here. You know what I mean?
Yeah, but it was for a trade for me, but I was buying off that 67 level, right?
And that would be, I would align with the 50 EMA where that weekly 9 is.
But this is a base, right? If you go to the daily on this,
for sure. I'm agreeing with you. I'm saying you try to buy it lower, or you try to buy it a little bit higher, basically. Maybe not.
You don't buy the chop, you buy the strength, or you buy the
That's right. Randy wants NVIDIA. I'd love to pull up NVIDIA again, since GP and I were so terribly wrong on what NVIDIA might do.
I'm gonna say it. I'm gonna say Lisa versus over NVIDIA, but hey now.
I am too. And AMD is my single largest position. So I'm not shy about that at all. AMD is my largest position for a reason.
But
I
if you're
really
looking
like,
at charts of chips, AMD looks between those two, right?
yeah.
I think Broadcom actually looks pretty damn good too. So does
Broadcom,
QCOM.
and I called that out 3 weeks ago now.
Yeah.
That I really like Broadcom. On Semi looks fantastic.
Yep.
And we'll look at those.
QCOM weeks and weeks of accumulation.
But looking at NVIDIA, it's my channel's not great here on the bottom side, but I still think you've got this to make it through. That's going to line up with the 50, the downtrend. So as we approach 200, it's either going to bust through it like the Kool-Aid man, or it's probably going to fail and have some chop back down. I'm not saying it's going to retest the lows, but I would expect it to eventually work its way and resolve higher. But again, below the weekly 9, coming back to AMD, just looks incredible.
So I bought AMD for the first time over 95.
AMD.
You're not showing your screen.
Does AMD not exist? What the hell's going on here?
Your screen's for, oh, there we go.
There we go. Your internet is unstable. Well, thank you for letting me know. Yeah, I think AMD looks great.
The daily looks awesome.
Yeah, I think AMD looks great. It basically powered through that pivot, right? Wow, what is wrong with my screen? Basically powered through that pivot. Let's pull up the volume there.
Yep.
Nice chug of volume. Really like it. But
so
on Semi,
yeah.
On Semi, a name that I've liked for a very long time. It just looks like it wants to break out, and it's hard for me to disagree with the 9 crossing over the 20 there. I just feel like it's got some strength behind it. It's had strength. You look at some of these Semi names, and they wish they were only down 30%, right, from the highs.
Yep.
And this guy has just held in there, and if anything, has built up a whole bunch of momentum here that's getting ready to be unleashed. And this is one of those that I would definitely buy it on the breakout.
Yeah, there's a lot of charts that look great, to be honest.
It's been a long time since we've said that or been able to say that.
Yeah. And that's what, I think I shared the QQQ chart and it tagged the 150-week SMA, right? 3 weeks ago. And we've been kind of basing at that level. It also lines up with the Biden lows and all that other stuff. So it's nice to see that they aren't breaking here and they're kind of holding. So, and if you're looking at individual chart names, they're basing and building, and obviously we could have a limit gap down tomorrow like any other time in life, but I like what we're seeing so far and the reactions from it.
Futures are green.
A little bit. It's Memorial Day.
It's Memorial Day, right? Yeah.
So I'm not even.
I would rather see this the case, and all of a sudden they're shitting the bed, giving back all of Friday, right? So at least there's that.
Yeah, and it's nice to see. I do see certain weaknesses, like I think Microsoft had a really good week, and that was the biggest thing about the Qs. It reclaimed the prior week high, right? That was a really kind of, we haven't done that in a really long time. So it was nice to see. Microsoft did the same thing. It came back into its little bull channel that it's had for months now. But Tesla did not reclaim its prior week highs, neither did Apple, right? So we could still have further like crappy action, right? Until we build out some more bases and stuff like that. So just stuff to pay attention to.
It's always nice when you see on a Friday, and this is what I twatted there at the end of the session, was close the high of the day, high of the week, and reclaim the monthly 20. And you're like, yeah, and we're beat the previous week's high.
It's hard to have a really negative sentiment based off those. All right, GP, we knocked it out an hour again.
Awesome.
without our help from our brother. Nick, we hope you're safe. I think you're with the family, but enjoy your time, brother. We'll see you next week.
Have a good one, Nick. Thanks, Bags, for hosting and making time for this. We've been doing this, 5 months, almost 6 months now?
Yeah.
So
we need to have a 6-month anniversary. The anniversary show.
You know what I did the other day when the markets were just doing nothing? I connected the YouTube video, the first one we did, to my big screen and just watched it. And I was like, oh, yes.